Hey, what's happening? Trader Tim from EminiMind doing the first trade recap video of the year. It's Thursday the 16th, and I'm just going to run through the whole week here in my ES trades. So we'll start off with the 13th Monday, and the first one was this nice double bottom 1 minute hammer. And the nice thing, you've heard me say it a lot, is about this hammer in particular, is that the tail sticks down. So if I hover my horizontal line over here, the tail sticks down below the low, and the body is kind of up at the support level. That's one of my favorite patterns here because it's showing price went down, it was rejected, and it came back up. I'm not sure what this big green or what the big frenzy selling or buying was on this bar, but shortly after we got in to 15-20 seconds, that bar took off, and so that one was a nice quick pop. Then actually re-entered on this hammer at 746. Got in again, so I put my stop underneath that low there. Got taken out for about 8 points, and then re-entered here. We came up, we kind of double topped, formed the inverted hammer. So this one ended up just being a scratch, taken out underneath this inverted hammer, and then it got a little bit interesting. So I drew up the full halfway back retracement like this. But then I noticed we got this hammer at the 21 EMA. So I redrew it from the higher low like that. And it was like, okay, well, the hammer formed. We were at the 21 EMA, and the second hammer formed, and we started to get liftoff off of the 50% in this 21 here. And at that time, going to the 512 tick chart, we formed this little double bottom. This is the swing high in between, and formed a nice little halfway back on the 512. So I took that halfway back long, and then I trailed the next 61.8 like this by 2 ticks. So that kept my stop below where these little tails are poking down below the 61.8. I always give it a couple of ticks. So I will round down. So 33.89, round it down to 75, and then go another 2 ticks, and that puts it underneath these lows. And then once we came up and went beyond the negative 23 here, I had started drawing up the next retracement with my stop underneath the 61.8. But when you get this big string of green like this and it just shoots off, then I just come in and start trailing each candle. So this one got out right about up here, about like that. And that one went about 10 points. So that was a nice run up. We gapped down on the morning, but then started to trend up very quickly and very nicely. So we had this nice, strong uptrend in play. So that was a pretty nice start to the week. When we have these bigger gaps, typically that yields better movement, but I always like to take a look at the breadth and advanced decline line. And as we roll forward into today's trades in a couple of minutes, you'll see that the breadth this morning was at 1-to-1, and it really made for just kind of a blah, choppy session. Whereas on Monday, we had a much a bigger gap and a stronger breadth. So, one thing that interesting thing a trader brought up to me. This wasn't my idea, but a trader, we were chatting, and he mentioned, what about, so on the 1 minute charts, trailing each bar is a really nice way to reduce your risk very quickly. The candle closes and boom, you move it up. Next candle closes, move it up. So every minute you're tightening your stop. And I like doing it that way. Kind of get you in a rhythm, and you're taking smaller wins, but more of them. But what he said is, on these candles, there's a lot of days where we're catching the low of the day, or at least the low of the morning session. And when you get these hammers that stick down below, like it is the low of the day at 742, in those instances, what about trailing swings when it is the low hammer for the day or the high inverted hammer for the day? And that that's an interesting idea. I don't have. I have to go back and look at all my trades and find the ones that were the low of the day to really get some data on that. But the idea being, if you are already buying essentially right near the low of the day, and it's going to trend, or the trend is going to reverse, well, you might catch a much bigger move that way. And as would have been the case on Monday, you just trailing the swing low, the next swing low, the next swing low, kind of all the way up. So I'll be, let's see, this one would be, it's not super clear, but it'd be like right in here. Is where you'd end up getting taken out. So interesting idea. If you want to look in that, I can poke around that further. But otherwise, just trailing each bar in the 1 minutes. Didn't really have any more retracements later in the week. Things were moving pretty nicely on the 1 minute chart. So I just kind of put my focus there and tried to exploit as many of those 1 minutes as I could. On Tuesday, during the live session, the first one was at 7:59. Oh, so same thing here. This was the low of the day here. We came within 1 point of the gap fill, so that was a really nice hammer here. Whereas this hammer was still a couple of points away from the prior day's close. So I figured, well, we're already in this downtrend. There's a good chance we'll complete. I thought we would get all the way to the gap fill. We made it just about a point away, so which is close enough. And so then this hammer set up long above the hammer. Same thing, trail each low. If you were to trail swings, you got a swing low here, swing low here, swing low here, and then even if you consider a break of the high of the previous bar solidifying the swing low, then this becomes your swing low to exit off of. So that was the first one. The second one, 818. Oh, that was this guy here. Nope, not that one. That was 818. Oh, yeah, that was this one. I tried to get in later in the trend, and then that one just was a stop out. So a little over 5 points on the first one, and then a 3-point stop out on the second one. Didn't have a whole lot of traction in, the 15-minute didn't get any plus 20s so far this week with the -4 stop. We had a couple days today and yesterday. Things got an initial strong break, but didn't have enough juice to go all the way to plus 20. Going to Wednesday. Wednesday was a nice morning. I was only able to trade the first 30 minutes. And same thing again Wednesday, the same pattern of gapping, dipping, and then putting in kind of the low of the morning fairly early. So this again, making this double bottom with the tail that sticks down below the low. You know, the theme here. And so just trailing each bar all the way up to here. And then going back to that idea of, well, if it is the low of the day, maybe you do trail swings and you keep in the trade a little bit longer, especially if it ends up running for quite a while. Even if we're range bound, it's not the end of the world. If you go from the bottom to the top of the range, sometimes that can be a 10, 15 point move. So that was the first one there, and that one was about 8.5 points. And the second one I took was 755. This guy, and then same thing, just trailing each candle. That was for another just about 8 points. So that was a really nice day, especially for only being there for about 35 minutes. And then that brings us to today. So Thursday, didn't really have much luck today. We had a smaller gap, and then we moved sideways. Our breadth was at 1-to-1. We were pretty flat, and just really didn't get much momentum. The pace at the open was a lot slower, and really having that breadth at 1-to-1 means, there's much more balance between bulls and bears, so it's going to be more of a tug of war. But I took one at 752. Oh, this inverted hammer. This was a great one. Right at the underside of the 21 EMA. We did start trending down, but we were just, it was that kind of day where we were going sideways, so it just kind of chopped around and didn't really get anything out of that. I did take this guy down here at 801. Not really a hammer, more of a doji, but it was the low of the day. So I thought, well, with that, being the theme for the week, maybe we'll catch a run up. It went initially, got a nice push, and then just kind of petered out. So both of those were, minus 2 points and minus 1 point. So not much to be giving back after a pretty strong start to the week. So I'll take that, and we'll do it again tomorrow and see what tomorrow brings, and then holiday and inauguration on Monday. So should have a lot of good trading opportunities here in the next couple months. So be ready and keep an eye on the VIX for an increase in volatility. And then the last thing, I was thinking about this week. Trading in a lot of ways is like parenting a little kid. You go through these phases with your kids, and if you can just get through those tough, frustrating times where they're throwing a tantrum or they're going through that phase where they're not sleeping or whatever the not so fun phase is. It's kind of like in trading, you got to get through those tough, choppy weeks, and then the good times will come. And so, we have had a lot of good times the last couple of months, especially with like the 15-minute opening range breakout, just knocking off 20 points, left and right. And whereas this week it has been a little bit slower. So it's just, if you can get through, these weeks without, getting too frustrated and, throwing in the towel, if you will. Maybe not the greatest analogy for parenting, but if you can get through those tough weeks, or not even tough, just times where you're not hitting home runs, that slump almost, then the good times are right around the corner. So overall, I have no qualms about this week. Is totally fine. Lots of good 1-minute trades, 15-minute not hitting plus 20s, and I didn't have a whole lot of 50% retracements, but overall still a great week and profitable and chugging along. So one last thing, we are at the 50% short on the daily chart. So this is a good place to buy puts if you want to hedge into next week. Great place to do that. So hope you have a great rest of your week. If you have questions, drop them in the comments below, and we'll talk to you soon.